Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure to reintroduce Mr. Darren Sinden, market commentator for Admiral Markets. How are you, Darren?
Very well, thank you, mate.
Decent weekend?
Yeah, not bad at all, thank you. My wife's birthday yesterday, so it was very nice.
Lovely. Happy birthday, Mrs. Sinden. In terms of the weekend press and the coverage, were you bullish, bearish, or no strong views?
No really strong views. Obviously, I think that the key thing I took away from the weekend was the China PMI data, which we'll touch on in a moment, and further cause for concern there, and perhaps the realisation that maybe things are spinning out in China as they should, and that the state's manipulation of the market is less effective than it has been. So perhaps it's we're seeing more of what the reality of the situation is there now.
Understood. Okay, well, if you're watching for the first time, we're here at 1 o'clock every day, covering basically the European thoughts and sort of the movers and shakers going to get into Wall Street. If you've got any ideas or any thoughts, or in fact, even if you want to come on the show, we'd like to hear from you, I think.
Yeah.
Let's go to the first slide of the day. This is data released over the European session. What's caught your attention this morning?
So we'll start with that China manufacturing PMI. The number for July came in, and this is the final read, by the way, that came in at 47.8. So that was well below both the preliminary read, which itself was low at 48.2, and the forecasts that analysts had of 50.2, which was bang in line with the prior read of 50.2. So, yeah, another disappointing number out of China. Remember, we had that
anything over 50 is
expansionary, yeah. But anything below that's contractionary, and obviously, a read of 47.8 is well into the negative read. We had that 7% GDP number from China, which nobody believed.
Yep.
This is probably leaning towards that the theory that things are actually worse than they might have seemed, and that growth in China is probably at best 6.5%, maybe lower. So. Pause for thought there. It's a big day for PMI data across the globe, actually. So not only do we have PMI data out in the Far East, but also here in Europe. We'll start with the German manufacturing PMI for July. Came in at 51.8. The forecast figure of 51.5, so better than the consensus, but still below the prior read for June of 51.9. So that's not... It's good, but not sparkling, shall we say.
Yep.
And then in terms of the same figure for the Eurozone as a whole, came in at 52.4 versus the forecast of 52.2, but once again below the prior read, which in this case was 52.5. All I would say about the Eurozone number is, and market compile this data, so I bow to their greater knowledge, but I find it hard to believe that the Eurozone has got a reading of 52.2 when Germany slightly undershoots, and France came in at something like 49.6, so contracting as well. So the second biggest economy is in contraction as far as this measure is concerned, and the biggest one is showing a declining read. Anyway, those are the numbers we were given. That's what we must take at face value, even if we're not entirely certain of the sentiment. And then over here in the UK, our own PMI.
The best number of the lot.
Yeah, July's number coming in at 51.9, well above the forecast of 51.6 and the prior read of 51.4. So probably another tick in the box for the hawks on the MPC, if they follow this particular data point,
Yep.
that is. But certainly more hawkish than dovish as far as interest rates are concerned.
Understood. Okay, so let's move on to European movers this morning. What's caught your attention here?
Right, well, first of all, Intertek in the UK, ticker ITRK, LN. This is a testing and quality assurance business. £27.36 they trading out shortly before we came on air, up 11.81%. And really, just a great set of numbers. First half profits in 2015 up 16.1% to 139.1 million. Revenues grew over the same period by 3.5% to just over £1 billion. Confirms that it will meet its full year guidance, and the company has raised its dividend. It's only a relatively small dividend compared to the share price, but it raised its dividend by a penny to 17 from 16 pence, and the market that's what it is.
Magnificent. And the opposite side of the spectrum?
Yes, over to Greece, where I'm sure most people are aware the stock markets have opened again after the best part of 6 weeks of suspension. National Bank of Greece we will take as a proxy for the rest of the index, of the listings there. 84 euro cents. They briefly opened and then halted at. That was down 30%. All of the banking stocks traded limit down almost immediately, and many other stocks too. The Greeks have done some very funny things here, though. They've also, not only have they imposed a short selling ban, they've also ring-fenced most of the local market from actually being able to buy Greek stocks because of the concern that people would use it as a vehicle to take further money out of the country. So whilst the market's actually open in Athens today, it seems that very few people can actually trade it in the direction they'd like to.
Understood. So let's move on to M&A, the rumours and movers.
Okay, well, it's a done deal again that we're looking at today, this time from HSBC, who reported their numbers this morning. But within that, they announced the sale of their Brazilian unit to Banco Bradesco of Brazil, the US ticker for those, BBD. They managed to talk Banco Bradesco into paying $5.2 billion in cash for that particular business. HSBC is also close to selling divisions in Turkey, and it recently sold a substantial stake in the China Industrial Bank Company. And this is all part of a strategy to focus on better performing units rather than small investments where it doesn't feel it can achieve, sensible operating performance. This Brazilian business, which is made up of two principal banks, has been underperforming for many years. Not entirely down to HSBC, though, because obviously the Brazilian economy has been struggling. They pitched up in Brazil in sort of 1990, but never really achieved critical mass. And the assets they've sold today represent around 2.3% of the Brazilian banking sector as a whole. So significant, but not huge. But interestingly, though, Bradesco is going to pay 1.8 times the book value of the HSBC Brazilian banking business, which is actually in excess of its own current valuation.
Right.
Which you have to question as to why they think that's a good idea, especially when the other bidder, which is Itaú Unibanco, was said to have offered less than book value. So it looks like, on the face of it, a good deal for HSBC to sort of cut its position there. Remains to be seen if Bradesco is overpaying. With the suggestion there is they probably are, yeah.
Understood. So let's take a look now at the US data points to keep an eye on today.
Quite a rich week for US data points. I picked on three that taken my eye today. So first of all, personal income for June. We just focus on the month-on-month number here, that there's a whole slug of additional data points with this one. But the forecast, first of all, is for this to come in at 0.3% against a prior read of 0.5%. Why I think this is quite interesting is because there was a lot of comment and Twitter, if you like, about the income statistics, the wage growth statistics last week, and it caused the dollar to slump quite sharply on Friday. A thin Friday, it must be said, but nonetheless it was market moving. So it'll be interesting to see if this data bears out that low wage growth. And then we've got a couple more data points that probably maybe more important. First of all, US manufacturing PMI for July, forecast to come in at 53.8, ahead of the prior read of 53.6. And then one data point that most people will look at quite closely, the Institute of Supply Management, or ISM, manufacturing index for July, again forecast to come in at 53.7, ahead of the prior read of 53.5. But just to give this some context, this has really been trending lower or remaining lower since the high reads of north of 56 at the end of 2014. So whilst it looks like it's going to be bouncing back, it's still got some way to go before we're back to where we were last year.
Understood. Okay, so let's wrap up with a final slide, the US pre-market movers and the chart levels. The chart levels refer to the cash markets.
Okay, so this is not so much pre-market movers, but just want to reiterate a move that we saw on Friday.
Yep.
In Exxon, which is ticker XOM, and Chevron, CVX, the two biggest US oil producing companies. 79.29 Exxon finished, and 88.45 Chevron. That was down 4.48% for Exxon and almost 5% for Chevron. And the comment here: oil majors are weaker after a failed attempt to rally on Friday, and they did try and rally, and they just, as I said, failed miserably. And earnings misses from both of those companies, and a building crude supply are blamed. And of course, oil prices are weakened again today, so it remains a tough market for even the largest oil majors.
Yep.
And then in terms of levels, quite a quiet day so far as far as European equity markets are concerned. So in the FTSE, we just shift the range slightly, 66.30 now, on the downside, plays 67.15 to the upside. The DAX is a little bit better, up around 35-40 points today, so 11,325 is our new downside level to watch, and we go with 11,400 to the upside. Very inconclusive price action in the US markets on Friday, so the S&P now 2100 on the downside, plays 21.15 to the upside, and a similar story in the Dow. 17,670 now is our downside level, plays at 17,790 to the upside. And no great shakes in currencies today either, so 109.40 on the downside for euro dollar, 109.90 is our upside level. 72.57 plays 73.06 in Aussie dollar, US dollar, slightly tighter there, and the fall may have been stemmed momentarily in the Aussie dollar. Dollar yen 124.00, bit of round number psychology coming in here, plays 124.30 to the upside, and in cable 155.60 plays 156.12 to the upside. But despite all the data, it really does feel like the start of a long summer break at the moment.
Okay, Darren Sinden, market commentator, Admiral Markets. That wraps up the Wall Street crossover show. We'll be back same time tomorrow, 1 p.m. Quite interesting that the markets almost feel a little bit quiet, particularly in the currencies, after all the volatility of the last 3 months. Seems almost dull.
It does actually, but quite surprising, but I think maybe people have had a tough 6 months and they're taking some well-earned time off.
Okay, we'll be back at 1 o'clock tomorrow. Have a good day. Thank you.